Good morning. We're taking a look at the super bull move that has happened in calendar 2013. And that, once again, the awareness needs to be brought to everyone's attention that we are extremely in overbought territories of the Dow Jones, the 30 here. On the weekly chart, the percent DS is showing us how overbought we are. We're ending the calendar year. Today's date is 12/1 of calendar 2013. That means that we have November and December before going into the new year. One of the things that I'm going to point out on a monthly chart is how the 2013 setup has happened in the Dow. We are in that overbought zone, and as we have entered this overbought territory, is it's just a matter of time before the price volatility in both sides of the market are going to increase. And that when we take a look at some of these other factors, that this monthly movement, this is the whole calendar year, and when you go back to the 2008 crises that went straight down. Here's what it looks like. What I am saying is that because we're so overbought in a high frequency algorithmic model that is done with high computing machines that take stocks in the Dow 30 component and have did the buy and sell and has gotten us to these levels. There is a lot of money on the sideline that has yet to return to the market. A lot of money in market funds and whatnot. One of the things that we're going to cover, though, is where the exuberance is on the Dow. And that once we have gotten into this territory, is that 2014, and we're forward looking, is that the volatility for 2014 is going to increase to extreme high levels, meaning that the bull will have the upside, but the bear will have the reversal side of the markets. 2014, going into that calendar year and ending this calendar year, is that we are at the stages of extreme parabolic. We've gone straight up the last 3 months. Today is December, or 12/1 is where November ended. So here's what the November tape has ended. Now we're December tape. And here is the extreme overbought on the monthly level. So what I want to tell all of the MMTs is that the volatility that is going to happen is that there's going to be a Christmas rally. They got their Thanksgiving rally, but listen, we're so overbought that once we enter these zones, we haven't been in these zones for a very long time. Back here in 11/1 of 2007, we were putting the highs in the marketplace, and back then where we were 12/1 of 2007 is when we called that volatility to the downside, and we did. And this is where the financial crisis happened. In 2009 we went parabolically up. We went parabolically up in 2011. We had pullbacks along the way, but this calendar spread of 2013 that is ending, you can clearly see that we have had 5 months parabolically straight up. Then we consolidated with a little bit of reversal volatility, and then we had another 3 month breakout, and we are now here on 12/1. And this is what the November month has looked like going into December. So beware that this market is extremely overbought, and the type of pullback that we're looking for is that when we take a look at the MACD, it's a public indicator. This thing, MCD, is at 980.86. So when we take a look at where the 10-month moving average is, it's at 15,056. Now, as we told people before, 15,000 was a psychological level. Here's a horizontal trend line on this monthly chart. The 10 month will be a support level. So basically, the bull has been in control of the markets and the bears have been left on the sideline. Yes, we had good pullbacks in a couple of calendar months here. However, we're due for a series of monthly pullbacks, meaning that the fear indicators are showing us very clearly that there is no fear in the market. There's a lot of money on the sideline that will chase these moves, and we are going to put in a blow off top on the Dow. So, January generally starts off with a great move and a big rally happens in January. Last January, when we started this out, we had a big rally. We don't see that being the case this January. And why is it? Because we're all the way up here now, and that pullback that is long overdue is that when people start taking profits, as they will, institutions are going to be selling into these moves moving forward. Starting Monday in December, we're going to see where people are going to take profits and institutions will be selling. And we're extremely overbought on the Dow. If you're going to chase this move here, as it will reverse in a time series, nothing is going to happen all at once, but in various different reversal stages from these exuberant levels in the Dow 30, is that the volatility is going to increase 100%. That means that people who have made big moves in this bull run better look at taking profits. You're going to have a new Fed governor coming in, Chairwoman Miss Yellen. Ben Bernanke, he's leaving. And the thing about the tapering, the government about the debt, there's going to be lots of things that is going to hit these markets, which will give it a reason to sell. And we're going to be taking a look at some of the Dow bear funds moving forward. This isn't all going to happen at one time. But throughout next year, when we look at a whole year movement in 2014, we're here to say that 12/1 of 2013 is that 2014 will have increased volatility in price. There's going to be lots of headwinds. The Obamacare, the market, the Republican, the Democrats, the new appointments that are coming. New Fed chairwoman is a dub. And if they increase the spending, QE, 3, the $85 billion a month, what will end up happening over the next couple of years is inflation. Well, we're going to get high inflation. We don't have any right now, none at all. However, things will be changing in that category in calendar 2014. Beware that we're going to be looking at the bear funds, and it's a time series of reversals that are going to happen in calendar 2014. And we'll update people as we move forward at closing out December that we'll start looking 6 months out in 2014, and then we'll break it down quarter by quarter, 3, 6, 9, 12 months, as why is it that the Dow is going to end up pulling back very hard, and the Dow 30 stocks are going to be shortable in this run. Now remember what I've said. It doesn't happen all at one time. But we have forecasted every move throughout 2013, and we've forecasted other prior tops that have happened in year 2000 and 2008, and that this bull run that we had in 2013, they got one calendar year, and this is a 3-month breakout at all-time highs. And we're just going to say that if you don't take profits and get in the right kind of trades moving forward, is that there'll be money to be made getting the bear funds. It's not right now, but it will happen, and it'll come clear to people at a later date. And we'll be updating everything about the economy, what the Democrats and the Republicans are going to do moving forward, and what will be the primary driver of volatility in 2014.